Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there. Or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, as always, we are live streaming to multiple different platforms. So the only method we will have for asking questions is going to be that Q&A window. Rob will go through his general presentation, we'll go through some case study considerations, and then with the time remaining, he will open it up to questions from all the live platforms that we are currently streaming to. So keeping that in mind, excuse me, we are going to take a combination of all questions from all the different platforms. So if we don't get to your question with the limited time we have, just know it has nothing to do with the validity. We just only have so much time in this session. And so with that, take it as encouragement to attend the insiders meeting, which aside from this week for the holidays, takes place every Thursday for our subscribers only. And there's a 45-minute Q&A portion solely based for our subscribers in that session. So obviously a much higher likelihood of getting your question addressed in that session. Lastly, any support related queries I can handle in the chat window. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. Just make note that by default for our Zoom audience, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the "to" at the bottom from hosts and panelists to everyone. As you might be able to hear, I sound a bit off, and that's because I've been a bit under the weather from COVID, unfortunately, and I'm definitely doing better now. Happy to be back with everyone, and I appreciate all the well wishes that I heard from John, who was kind enough to fill in for me last week. So still recovering a bit, but definitely much better than I was last week. So super low volume this week with the holidays. That's to be expected, and sometimes the volume can shoot up towards the end, which the market went up a bit for us today. So I'm anxious to hear Rob's thoughts. I'll stop blabbering on and introduce who we're all here for. Thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour. That's Rob Roy.
Hi, everybody, and welcome to TradeFinder Live. Good to have you back, Zach. Obviously, from the sound of your voice, you're not 100%, but certainly good to have you back with us, and appreciate you being a trooper and coming on with us. Welcome to everybody from all the live streaming media platforms. Zach went over a pretty good intro, so I won't spend much time on it. We will talk about the U.S. market and international markets as well. We'll review any case study trade alerts that we have for our alert subscribers at Elliott Wave Options, and give you an idea how that works. Then we'll look for case study considerations for this week while reviewing ones from previous trade finders. We only have 2 that would be considered to be open. So if I don't babble on too much about the markets, we likely will have a few more opportunities for questions in this session tonight. So with that, let's go ahead and take a look at the market. And the market did move to the upside. You can look at the volume down here, and this is what happens when
Sorry, Rob. We can't see your screen at the moment.
One time. Then double check it.
Good to go.
I've been double checking it every time. Is that good now?
Yep, we see the software all set.
Okay. Well, I was drawing this arrow down here to highlight this really low volume that happened during holiday weeks. And as you can tell, normally the volume drops off tomorrow on Wednesday, but seems like everybody's already taken a whole week for Thanksgiving holiday this week here in the U.S. Just so everybody knows, the market is closed on Thursday and open a half a day on Friday. It closes at 1 p.m. Eastern time on Friday. So that's why normally, by Wednesday afternoon, nobody's really there at the markets after noon on Wednesday. And so that's when the volume really dries up. But with these two, these look like half days. This looks like a Friday type volume closing at 1 o'clock. That's how low the volume's been. There's an old expression with the markets, never short a dull market. And that's what they're talking about. A dull market is a low volume market. So without the volume, markets tend to rise. And that's what happened today. We had the doji yesterday that I noted in the EWO short, the at the close, and this was a move back to the upside today. So right back up to 400, and we've been waiting to see what's going to complete first, this zigzag pattern that we have here, or are we going to hold here and then move and head down towards that wave 5 target. So with a low volume week, volatility can come in on either side. There is that expression, never short a dull market. But remember, when the volume is low, if there's some sort of a negative headline, you can have an exaggerated, he tried to say, move to the downside as well. But right now, you would have to think that there's an opportunity for the market to drift up tomorrow and on Friday, and maybe start to look like we're going to complete this C wave on the zigzag pattern if we take out that wave 4 high. That's going to be the key. That's what everybody will be watching for. If we take out that wave 4 high, it's just not going to take much from here to disqualify this 5 wave pattern. We're at a 75% extension. You get to 78.6, and that's when Elliott said, that's it. And then also, if we take out this wave 1 low from the rules of Elliott Wave and the algorithm itself, it will go away. So we're very close to it being disqualified, as the Dow has done previously, but not there yet. I wanted to put the moving averages on. You can see that we're climbing above the 10-day moving average. So that's really a bullish sign when you see the lows coming down and touching the 10-day moving average, and then trading higher than that at the close each and every day. But again, you have to take into account it's a holiday shortened week. So whatever happens throughout the rest of this week could get reversed on Monday. And that's the other thing that happens when you have these low volume type moves, is you have to be really careful not to get too caught up in it, not to necessarily think, hey, all's clear, because there's just not a lot of traders around, obviously, by looking at the volume. We had some help today for the markets between rates and the dollar. You can see interest rates down a little bit and the dollar down a little bit after having an up day yesterday. So an up day in the dollar yesterday, and we really only were down slightly on the markets. And then if you look at interest rates, again, slightly up yesterday, back today. So washout on the interest rates and the dollar from the previous 2 days. Up yesterday, down today. No harm, no foul between those 2 days. And that 38% Fibonacci level still holding on the wave 4 on the dollar. But it is trying to creep back to the upside. But as you can see, although we did close barely above the 10-day moving average yesterday, back below it today. So to really feel comfortable that that wave 4 is in, certainly we're going to have to put some more distance between where the market is and the 10-day moving average. And then we've got the 50-day moving average not too far away. So there's some issues for the dollar to work through if it's going to try to continue to move higher from here. Let's look at the VIX first before I go to the diamonds. So as you can imagine, with this lower volume, the VIX is going down, and look what happened today. Look at that move down today. So the picture, I mean, this scenario, the market creeps up tomorrow, Friday, and then we come in on Monday. We've got the VIX back down at 20, which has been support. So you have these up days today, tomorrow, and Friday, maybe. We'll see how it plays out. But I'm just giving you a potential scenario here that if we do move up tomorrow and on half day Friday and the VIX comes down to 20, well, is all that going to get reversed on Monday? It could. So again, just caution not to get too excited or too caught up in any sort of a continued movement up this week if it were to happen, because it almost doesn't count when you have that low volume. So that's the VIX, and let's go ahead and take a look at the other markets. And as you can imagine, the diamonds looking pretty strong, about to break that August high, very close to it. And The closing high, let's see, did we break the closing high? We closed at 341.74. Not quite, but awfully close to taking out the closing high in August. Very close to it. And the same thing is going to happen with the diamonds, the Dow, as with all the markets will be the same as far as the low volume. In fact, let's just take a look at the volume there and see if it was any better. And it was actually. There have been some good earnings reports, and I do think that that's going to be a whole different story next quarter. Talked about that numerous times. It's been a mixed bag. I think there's been some big time misses, and then there's been a lot of companies that have been able to manage through the situation so far. But next quarter, when we get to finding out was the holiday spending what everybody expected it to be, as inflation caused consumers to pull back, you would think so. I mean, the U.S. consumer is a pretty strong entity, that's for sure. But we'll see if that affects how much spending occurs, and when the early numbers start coming in for Black Friday spending, to see if you'll get those reports pretty quickly on whether or not people were happy with the spending that occurred. So perhaps we'll start to get some information. But remember, the market closes at 1 o'clock. So by the time we start hearing, the market will be closed. And then again, you get Monday. So if there's a disappointment on the spending on Friday, then we have to wait till Monday for that to be reflected in the market. So, it's just going to be an interesting few days with where we are in the pattern with coinciding with a holiday week. So on the Qs, still holding that wave 4, not back up quite near it yet. Once again, underperforming, very low volume here as well. So very low volume on the Qs, very low volume on the S&P. The money is rotated into the Dow, and you can imagine that's, the bigger companies, more staying power when the economy weakens a bit. And so that makes sense. I'm still surprised the Dow has been as strong as it has been, but it's not, amazingly surprising, but slightly. So here we are on top of the 50-day moving average now on the Qs, and we've held that for 4 days. That's pretty impressive. Are we going to take out this wave 4? We wouldn't quite disqualify the 5-wave pattern yet, but it sure would mess up what's a really nicely set up 5-wave impulse pattern. It looks really good right now. But if we take out that wave 4, then that changes. There's a little bit of room to the 61.8% fib extension, but not a whole lot. And that's going to be interesting to see. Now, the IWM, have we been able to get above 190? I'm sure that's the question. And the answer is no. We went right up there and got turned back. So right up to 190 and then turned back. Now we're going to try to see if we can make a run. I don't know if there's enough time between tomorrow and Friday, even with the low volume, to be able to get the IWM to break above that 190 level, but it may give it a run here over the next couple of trading days and see if it can get back up there. But same old story here, moving back and forth between 170 and 190. So that's what's going on with the IWM, and we haven't talked about much else for quite some time with the IWM, other than it was 190 to 210. Bitcoin had a significant move to the downside, but did hold the 16,000 level in today's trade. You can see what happened yesterday where we closed at 15. I know trades 24/7. I got all that stuff, but as with the regular charting, you have fixed closes so that you can look at end of day charts. So it essentially reflects a close yesterday below 16, but back up above it today. But we're below that 10-day moving average, and until we get back above the 10-day moving average, you have to say that things are hanging on an edge. I'm sure you have been inundated with all the FTX headlines, just like everybody else, when it comes to the crypto world, and everything crypto is being swept up in it. And the reason for that is there's concerns about how bad the contagion effect is going to be, how far reaching Is this blow up at FTX going to be felt? Already some, high profile names have announced that they're going to go out of business as well. So every day that goes by is a day closer to when there'll be a little bit more calm in the fact that the whole crypto world isn't going to completely fall apart just because of FTX. So every day we go by is a day closer to getting back above that 10-day moving average is what I'm trying to say. But we could easily come down to 12 before. We talked about that if we can't hold 16, 12 is the next move. So, but holy cow, just inundated with news about that FTX debacle. And then looking at some of our international markets, Australia, dealing with some allergies today, been sneezing all day. EWA still hanging underneath that 23 level, can't seem to get above 23. That's the key. If we do, then we may be looking at a new impulse pattern. This just is a classic Elliott Wave pattern. For those of you watching on the various live streaming services, if you're newer to Elliott Wave, this is exactly what's supposed to happen. This is a classic Elliott Wave setup. When you have the 5-wave impulse pattern followed by the corrective move after it, the wave 5 went down to 61.8. That's where it's supposed to go. When you have a 38.2% wave 4 correction, and then when the wave 5 ends, you're supposed to retrace back to the previous 4. All of that happened exactly spot on as it's supposed to. But now, since we've gone back to the previous 4, you wait for a new move. And look, it's almost like the market itself in Australia, the EWA is not, okay, now what do we do? That was easy. We retrace back to the previous 4. Now what happens? And so what you do as an Elliott Wave trader is this is where you become patient and you let the next pattern develop and show itself to you without trying to guess. Because right now, if you're trying to trade about the stock market or about the EWA moving above 23 or falling back with 23 being resistance, you're just guessing, at least from an Elliott Wave standpoint. Now you can look at some of your other indicators and get some ideas on what may happen there. But Elliott Wave is our primary indicator. And then we have our supporting indicators that we have a lot of faith in as well to confirm what we see with Elliott Wave. But right now, when the primary indicator of Elliott Wave is telling you wait and see, I think that's the prudent thing to do. But really interesting that we've just gone sideways right at that previous wave 4, right after doing what it was supposed to do. And so here we look at Canada now, a little bit different here, going through the rules. Just do some Elliott Wave education since we're not going to have as many charts to look at. When we go through and we have a wave 5 that extends more than 100%, you only look for a 61.8% correction, not a correction back to the previous 4. And look what happened with the EWC. Also, spot on. We correct back 61.8%. When you have a wave 5 that extends back 100%, that's exactly what happened. It hit it. It came back to the previous level there at 50%, and then retraced back up to the 61.8%. Again, wait and let it tell you what is going to happen. So it's almost like you can kind of see why the traders are just taking a week off. It's like, well, there's not really a lot of direction right now as far as what's going to happen next. And so everybody, let's just go enjoy a holiday week, and then we'll come back and figure things out next week. That seems to be the theme of the markets so far this week. So looking at the INDA, and it has pulled back a bit, got up to 44, found some resistance there. Not really surprising. Take the Elliott Wave pattern off because that wave 4 went too far down. And so we look here, and you can see that we ran into resistance there at 44. We've backed off. We did hold the 50-day moving average, but still underneath the 10-day moving average. So you got to get back above the 10-day moving average, or you're still in danger of going back down to 41 again. So you want to see, if you're long the INDA or the Nifty, you want to see this INDA back above 43 rather quickly within the next couple of trading days. The longer it takes, the less likelihood that it's going to do that and could fall more. The shorts, when they sense blood in the water, they put the pedal down. And so if they feel like there's not enough strength to the upside, they'll dip their toes in the water and see what they can come up with. EWG for Germany, we take a look there, you can see also just right at an area of resistance, which is now formed at 25. And that was resistance going all the way back to the beginning of the year, March, and then May again. And we broke that below it in June. Didn't really test it in August, didn't quite get there, but we're there now. So testing that level of support resistance at 25, and you have to be happy for the German market to finally have some sort of a move to the upside, but not so happy that it is labeled in a 5-way pattern to the downside. It could just be a wave 4 correction higher, and we're right there at the 61.8% fib level. Is that going to hold? Are we going to start down in a wave 5 lower, or can we take a move up there and potentially disqualify this pattern as well? We'll just have to wait and see how that plays out. I did want to show Hong Kong, the EWH, and you can see here that we had just gone so vertical. And I believe we may have talked about it over the weekend or last week with how vertical this move was. And it also was right at the 61.8% retracement level. What a logical point for a market to turn and head back down. You've gone straight up, vertically up. You know how I feel about vertical moves. What goes straight up often comes straight back down. And you're also hitting a 61.8% fib level. And look what's happened since then, all the way back down to 19. So we went from 20 back down to 19 here on the EWH. But now we held the 10-day moving average today. And perhaps that's it, because we kind of retrace this really vertical part here, and there is some support at 19. Now we could also go down to 18. There's a chance that it goes down to the next level of support there, but that would only come into play obviously if we broke below the 10-day moving average. So until that happens, you still want to kind of look at that to continue to move back to the upside. So I wanted to show you, we've shown just a plethora of winning trades on our AI time strategy, AI based. All of our alert subscribers are aware of it. It uses true AI to help us identify stocks that are going to stay in a sideways pattern. But what I thought I would show you is what we tend to do here when one goes awry. So we had a whole list. If you go back and look at the last couple of weeks, just winner, 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 winner. Well, here's a loss on Snap. Now, it was a butterfly initially. And the key thing about a butterfly is if it stays within the wings right at expiration, that's when you generate the highest percentage gain. So you kind of want to give it that opportunity when you can. Well, in this case, Snap moved out right before expiration. And so the original position was 100% loss. So you can just accept your loss and move on, take the loss and say, okay, well, we gave the butterfly a chance. If the stock would have dropped back down in, we would have been great. It didn't. And so, take the loss and move on. But the AI is telling us this is a range bound stock. We've had success with it before. So we chose to go ahead and make an adjustment here for another butterfly, and then posted a comment to let everybody know that, hey, if you're a new alert subscriber to our AI time strategy, which we had people all the time, and you weren't in the original one, it would be okay to follow this one as well. So it's not just an adjustment for people that were in the original one. And so look what happened with the second one. We just took this off. And so what it was 100% loss, we recovered to a 30% loss. Some people did better than that with the fills that went through. It was up to 99 cents at one point today. But you can see the second trade was a great trade. $448 invested, got $768 back. That's a big win. And that big win on that adjustment helped to significantly mitigate the initial loss. So if we see opportunities to adjust a position rather than just simply close it and take a loss, we will do that. There are times when you just want to take the loss, but if you have an opportunity and you can go through and mitigate a loss, why not do it? And so I wanted to go ahead and show you the chart. You can see why we took it off. We had a 8, 10, 12 butterfly, and we put it on when we were back here at 12 because that's why it had gone outside of the original butterfly. Well, then it came back down in our midpoint and hit it dead spot on the midpoint of the butterfly. Now, we did have a little bit more time in the butterfly, and we could have made some more money, but there was only 50 cents left in the mid strike. So you're risking already nice recovery. And I think it's important, I talk about this a lot, to remember what the original plan was. And the original plan was to do this adjustment to mitigate the original loss. Well, we accomplished that goal. We didn't get rid of all of it, which we would like to, but we got rid of most of it. And so you risk losing that because the stock is dead center now. Now, if it stays dead center towards expiration, you can say, well, we could have made more. But if it doesn't, if it moves back up towards 12 or moves down towards 8, even staying in the range of the butterfly, we risk what we accomplished already, which was mitigating the loss. So we haven't had very many losers within the time strategy. It's been remarkably accurate. We haven't had a losing month either. And so I just thought I would show you that, hey, there are alerts that that are losers, and here's how we take care of them. So I hope you found that interesting, something a little bit different. All right, so let's go back and look at our, pardon me, at our case studies, case study considerations from previous TradeFinders. There's only two, as I mentioned in the intro. Here's ADP, which we looked at on November 1st. And we talked about this one last week, and look what's happened. Boom. So, yeah, that was a big winner. So we're going to close that one off too. And we've had if you've been following along, if you're new to TradeFinder, go back and look at the past recordings. They're all on YouTube. And if you're watching on YouTube, haven't visited our YouTube channel, please do so, Elliott Wave Options. And all these TradeFinders are posted there, and you can go back and see for yourself, because we're going to look for one tonight. We do it every single week, and you can see the results. They're all there live every Tuesday night when we do this. And so that was that. And then last week we looked at Oshkosh, OSK, and we did have a doji there and a little separation. And we did come back to the 10-day moving average, but now we're back and we're above where we were last Tuesday, barely, but looking pretty good now. So stay with that one. So that one we'll keep because we have a target up to 98. And if it gets to 98, perhaps it goes to 100. And that's the move back to the previous 4, which you saw on the Aussie market, the EWA that I just showed you. It's the same Elliott Wave rules are what we're expecting to see. That's where our target price came from. So let's see what we can find to take a look at tonight. So again, we're only going to have 2 to look at again next week as well, this OSK and whatever we find tonight. So on the bullish impulse, which probably makes sense with a couple of holiday days ahead, there's 14. And I think, was it last week or 2 weeks ago when there was 12? And I said, that's an unusually high number. Well, 14, I don't think I can ever remember. I created this search. This is mine in the software program. The Evo searches are my searches, the parameters, and we allow our subscribers to have those parameters. If they have this software program called Profit Source as well, you can find out more about that at hubb.com. But when you take a look here, O'Reilly is back on here. That's amazing. Let's just take a look at that just for the heck of it, because it's had a really nice move already. And, you know, the fact that it's still on the list, I think that would be, you know, being a bit aggressive. You take a look at the DMI and it still looks good, but with such a strong move already out of that, I think we'll probably look for something else. But I just thought it was interesting because we had looked at this one several weeks ago, back when it was down under here around under 748. Back when it was fighting underneath this level. I really wanted to send this one out as an alert to our alert subscribers, but the problem was the spreads were way too wide, and it just unfortunately the options just weren't there, and that happens sometimes. Sometimes you find great patterns, but you can't find a great options trade. Well, when you're trading options, it's two pieces. You have to have the direction or non-direction, whatever kind of strategy you're trading, and you need a good options trade as well. So you have to have both pieces, and that wasn't there. So we have Tractor Supply, paychecks. It seems like that might be good going into the holidays. Seems like a pretty good time for that. Let's see what the Elliott Wave pattern looks like. Oh, it's not in one. So let's see what the DMI looks like. And that doesn't look too bad. I mean, there's not really a whole lot of resistance. Maybe a little bit at 130. Going back into March and April, so perhaps a little bit right there, but there's not a whole lot of resistance there. So let's keep that one. We'll look at a couple more, see if we can find something else here to take a look at. Archer Daniels Midland. We all know what's going on with food prices, also not in a five-wave pattern. That's interesting. Let's see what the DMI looks like there as well. Also not so bad. And boy, if that could break 100, that could be off and running. Had a little bit of resistance up in this area just a couple weeks ago, and now it's giving it another go. You would certainly think that it's going to at least hit 100. Then we'll see what happens from there. Zach, you better not have made me sick through the internet. But looking here, I think it's really just allergies. But looking up here with a move to 100, that one's pretty good too. So there's two good ones. Not big moves, but I think you want to be really careful. AP air products for packing materials and stuff. Yeah, you can see. Was that an earnings report today, or is that just it had a good day today? That's not earnings. But you know, this is the time of the year for this kind of stuff, right? Yeah, but that DMI there is advanced, so I think we'll pass on that one. But certainly had a good day today. We'll close that one off. And we want to look at, let's look at Monster Beverage, because that one's a pretty good place. Yeah, this may be our winner here, because this is a pretty good place to be in the, just not, you know, this week with the low volume propensity to rise, but a place that people go for hiding, you know, defensive sector when the economy weakens. And it just broke out of that triangle right underneath. There's a small triangle, but this is why Elliott said don't forget about the small triangles. They matter too. And that's the big move there. It might be a little bit overbought. It's a little bit overbought right now. So we might want to hope that it pulls back a little bit in the morning, because that's confirmation. So you get a breakout of a triangle, you break above resistance, you break above a major price level at 100, and you confirm the breakout move. So broke out yesterday, confirmed it today. And even if we have to live with a little bit of a pullback like we did on OSK, I think the longer term is pretty good for that. So let's go ahead. I mean, there was a few there that we can keep an eye on. I'll put the other ones on the watch list, but let's make Monster MNST as our case study consideration for tonight. I like that one going forward for the longer term. In other words, you know, getting into the next quarter. So on the watch list, we'll add in paychecks and Archer Daniels Midland. So I'm going to make a note real quick that those are watch lists from tonight. All right, we'll see how those play out next week. All right, well, Zach, I know your voice isn't the strongest, but that's everything I wanted to do. So I'm happy to go ahead and take some questions now.
Absolutely. Yeah. Thanks for that presentation, Rob. And I stepped away for a moment there to take some medicine. I think I heard you ask if I was getting you sick, and I certainly hope not.
So you better not have sent it through the airwaves and the internet. So.
Yeah, let's hope not. I definitely don't want to wish this on anyone. So we'll start out with
Yeah, I think mine's just allergies. I've been sneezing all day.
yeah, hopefully so. So we'll start out with this first one here from Ren, who would like to look at Rivian, and also sent through some kind thoughts. So thank you again to Ren and everyone else that's passed through those kind thoughts last week and this week.
Yeah, I know you appreciate it, Zach. All right, so not a whole lot going on here with Rivian. So we're just kind of going sideways here. Major point of resistance, support and resistance here at 30, but it is breaking below it. You're below the 10-day moving average. What you really want to see is the stock get back above 30 and back above the 10-day moving average. Right now, it's in real danger of coming down and testing this next area of support at 25. And that DMI is setting up, and that's not looking too good. It hasn't triggered, so the ADX is not above 20 yet. It looks like it's setting up to trigger, but it hasn't yet. And our subscribers know you got to let that ADX actually do its thing. It's got to break above 20, but by the time it gets there, we could be at 25. So I think you have to think that this is going lower down to 25 unless it's able to get back above 30. If it can get back above 30 and back above the 10-day moving average, then take that choice off. But for right now, it looks to me like it wants to come down and test 25. You get a whole series of lower highs here too. Yeah, it's a pretty decent descending triangle actually. We draw the upper line on and the support at 30 there. You don't want to see it break to the downside out of that triangle, because that's 10 points. So that gets you down to 20. That's testing those lows from May if we continue this breakout. And it didn't confirm it today because it closed higher than yesterday. But boy, dangerously close to it. So if you're wanting to be long this, I think perhaps wait a little bit and see if you can get back above 30. It looks like a better short right now.
I agree. Next up, we will go with gold. There's been a few requests for gold.
Take a look at the GLD. So we had that nice run. It did get a little bit vertical, and now we're back, and we'll see if it can hold 160. And you certainly want to see that happen to hold 160. And it seems like it would from a fundamental standpoint. The DMI still looks pretty good. It's come down a little bit, but it was about as extended as you can get between the two directional indicators. So the key is going to be, can it hold 160? It's trying to hold the 10-day moving average right here and not even make it down to 160. And if it does, so it got awfully close to that previous 4, and it got right there. As you can see on the bounce back up to the previous 4, got just almost exactly there, but not quite. So you would think that even if it comes down to 160, that we are going to come up and hit that 168 and follow through with the wave 5 and going back to the previous 4. Here's another one, roughly the 38% wave 4 correction and a 61.8% wave 5 extension. So looks pretty good there. I'm curious how long it's going to be before somebody asks for Tesla.
Well, we were definitely going that direction, so let's go ahead and let's go with that.
Yeah, it's even getting comments about Tesla on our shorts, and we only cover the S&P on the YouTube shorts, the ATC. But yeah, people are, and we've talked about this. I think we nailed this pretty well. So if it didn't get back above 200, there was real danger of it coming down, and it's just continuing to go down. Now it's forecasting lower and lower on the wave 5. So if we come back here, you can see that 160 was where the target was. And now that it's come down and it's almost there, it's saying, yikes, we could still go even lower. And you have to wonder, is this people concerned about the growth of Tesla? Is it because of the valuation? Are they upset that Elon's going to be spending so much time trying to fix Twitter that he's not going to have as much hands-on with Tesla because they already have SpaceX and everything? So there's just a lot going against Tesla right now. You saw the Rivian breaking down as well. So it's just until Tesla can get back above 200, I think you stay short this stock. And at some point, we'll get a wave 4 bounce, and it's oversold right now. So there is a little separation here, but a bounce back to the upside, it's got a ways to go just to get back to the 10-day moving average. But for me, until it can get back above 200, you stay short Tesla. And wow, to see it potentially come down to 120 would be amazing. But that is a great looking zigzag pattern there. And we start our zigzag mastery class tomorrow. It's going to be our first class, and we'll be talking about all of these zigzags here. And then let's just take a look at the latest one and see if that gives us some sort of a price target. So yeah, 61.8, it just gets us down to that 160 level, which was the original wave 5. But if it gives us an extended C wave, look where that goes. The extended C wave down to 100% extension, because it's a 38.2% extent or retracement on the B wave, brings us right back down into that tap box, right down there to the top of this wave 5 projection. So you have two patterns, the 5-wave impulse pattern and this 3-wave zigzag pattern, giving you the potential for 140 on Tesla. So I think you have to pay attention to that and be wary. Even if we get a bit of a bounce, which we should get, just similar to what we had back here on November 9th, where we came back up, tested 200, hit the 10-day moving average, and then that's been it since then. It just doesn't look like the selling is over, even with a short-term bounce on Tesla.
Yeah, that's always an interesting chart to look at, but that was a great point that you made, that there might be a lot of uncertainty in the masses, which is creating, this downtrend that what we're looking at now on the chart, with him possibly being
I think that has to play in. I'm sorry, I didn't mean to interrupt you, Zach. I think that has to play into it. I don't know how much, but you got to feel like there's some factor there.
Yeah, I'm sure there's a lot that agree that it might be spread too thin. So the next one, we have some curiosity around CAT.
His cat has 9 lives, that's for sure. Just here we're trying to go back up and test that 240 level once again. We're starting down, everything looked great. It hit the 240 level and moving down. At some point, we're going to come down and fill this gap. I really don't understand, because there's no fundamental reasoning behind why this would be doing this. We've got this holiday time. Probably going to go back up and test 240. I wouldn't be concerned unless I saw a break above 240 with some sort of a significant move in the DMI, and you've got the ADX above 40 and it crossed back below 40. That tells you that that's usually the end of the upward move. Well, it didn't listen today, did it? Went back to the upside, but again, pretty much everything was up on almost no volume today. So the ADX is telling you, and the DMI is telling you, that this part of the move is over. Now, whether or not we do come all the way down and close that gap remains to be seen. But I just don't think there's much left to the upside here. Perhaps we do test 240 and head back over. But I'd be really surprised if we go much further than that, with the fact that the ADX has broken back below 40. I think today's move had more to do with the market rising tide lifting all boats than it did Caterpillar itself.
Alrighty. Next up, I got a couple symbols for you from Andrew. First one is EWI.
Italy, we haven't looked at that one, so thanks for bringing in a new international market to the mix. So here we are going dead side. I mean, a lot of these international markets just haven't done anything for a week or so. You saw it with Australia, Canada, etc. So we're just going dead sideways here. India, and we're dangerously close to disqualifying this 5-wave pattern to the downside as well. Not yet, but really close with 75% on the extension here. We could see this disqualify this pattern over the next couple of trading days if it breaks above it. But right now it's just going dead sideways, and but it's holding above the 10-day moving average. So where does it go if it breaks above here? Well, that's easy. If it can break above 27, then it easily makes 29. There's just nothing in the way. Look, it gapped down through here. So if we can put a little movement above 27 here, it's going to run to 29 before it bumps its head again. And that will surely disqualify the 5-wave pattern, but it's got to do it first. And to do that, it's got to take out this wave 4 high, which it's very close to doing, but it's got to actually do it, not just get close to it. But yeah, interesting chart. I haven't looked at Italy before in TradeFinder.
Yeah, agreed. That was nice for a change. So thanks for the question, Andrew, and thanks for the analysis there, Rob. The second symbol is going to be COPX.
This is, we've talked about Dr. Copper before, then this is the miners. And so movement lower here, that would, you saw this big move to the upside, and that, for those of you that are not familiar, the slang name Dr. Copper came from the fact that a lot of people feel that looking at copper gives you an idea of what's going to happen in the economy. It's a good economic indicator, if you will. And so it got a lot of people's attention when we had this vertical move. But as we've just talked about, when things go vertically up, often they come vertically back down, which is what copper, at least the miners, did as well. We bounced back today, but again, can you count anything that happens this week? I'm not sure you really can. I think we just have to watch. If you can jump in and jump out real quick in a couple day trade, great. Take that. But I think if we do finish to the upside again tomorrow, all eyes will be on Black Friday and what those retail reports are. That's going to have a lot to do with how we start next week. But as far as the miners, you have to say it did hold 33, and there's a chance that we go up to 38. And if it does do that, then that's telling us that perhaps we are not going to have as deep a recession as people fear. It certainly would fly in the face of what the 210 pairs have told us, which is predicting a pretty decent recession. So we'll see how that goes. In fact, let's just go ahead and take a look at the yield curve since I brought it up. Didn't mean to interrupt you there, Zach, on the questions, but I just thought that this would be an interesting time. And see, we're still significantly inverted. So there hasn't been a big change there. But, you know, a lot of people do watch copper. So anyway, let me summarize on copper. If it can hold 33, you have to give it a likelihood of going to 38. I think that's highly likely. But if it breaks below 33, then that changes everything.
Very well. Thanks for that, Rob. Next up, we have Larry, who would like to look at TLT.
Staying in the bond theme. And so we looked at TNX earlier. So now we'll go to the 20-year. And you can see that bouncing here almost at a 38% wave 4 correction. So that would mean that if we go down here, then rates are going back to the upside because this is prices. So if the prices start down, rates are going back up. I think that makes a lot of sense, but it's got to do it first. And there's a little more room to the upside here to hit even the 38% Fibonacci level here on the wave 4. But your signal here, if you're wanting to know what to look at as far as to trade it, as long as it stays above 100, you stay long. If it breaks below 100, then you go short, because if it breaks below 100, there's nothing to stop it until it comes down here to 95, and that means rates are going up quite a bit. So that's the key. If you can hold 100, you can stay long. But if it breaks below 100, it's not one of those scenarios where you just, that's your stop and you just get out of a long position. There would be a really good short position at that point in time, because there's just nothing in the way to stop it. Two gaps, there's just nothing in the way to stop it to go down to 95 again.
All right, next up, we have a question from Chuck. Hello, Rob. Can you please look at Microsoft? Looks like an easy gap up. How high do you see it going?
Mr. Softy. So is that the gap up, the one from back here? Must be what we're talking about. And then we've got earnings a ways away, so that's not going to affect it. At some point it'll fill that gap, but it's holding nicely above a really strong level of support resistance at 240. It's been a big deal for a while. So as long as it holds above 240, I think the likelihood is that we come back here, because that's retracing the wave 5 at 61% there on the fib level. So going back up to 250, I think, is where we're going, and then we'll see what happens there, because that'll be the culmination of this Elliott Wave pattern, just like we talked about with the EWA. But maybe perhaps after that, then maybe it starts to work its way down to fill that gap. Well, we're going to have a whole lot better idea, I think, on a preview of, if I'm right, that next quarter's earnings are going to be rough, by the reports that come out on Good Friday. They're just going to give us a preview of whether or not inflation is really affecting the consumer's spending habits.
All right. Well, we had a request for NVIDIA, so I can't pass that one up.
Yeah, they were talking about you last week with this NVIDIA chart, but it has recovered, as you can see. People were concerned. We had this doji here move lower. There was some chatter about, somebody made a comment about you in NVIDIA that you probably weren't happy or something like that. But, it just had a doji. It got overbought. This is just a classic case of rectifying an overbought condition. Look at that. You can see it was well above the 10-day moving average with a doji. This is coming down. I don't care how good the stock is. Perhaps it could have gotten to 180 first, but when you have a doji and that kind of separation with the 10-day moving average, that's what it did. It just came back to the 10-day moving average and then had a nice move, and closing right at 160 was key. It'll be even more important if it can close back above 160 tomorrow. I still think that you take this week with a grain of salt, but you got to look at the patterns that we're given. And so if it can get back above 160, then I think it probably wants to take another run at 180, provided it doesn't get into overbought territory again. But yeah, looking a lot better than last week.
Yes, indeed. All right, good to see you there. And so we will go over to Disney now. There's been a couple requests for that.
Yeah, I can imagine. The big news about bringing, he tried to say, Bob Iger back. I don't know why bringing Bob Iger is a difficult phrase for me, but a lot of hope behind that, as you could see yesterday, but big old gap. So came back down today to try to fill that. But if you're not familiar, they replaced the CEO over the weekend in a real surprise move, caught everybody by surprise Sunday night. Bob Iger is well thought of for building in Disney into the global entertainment empire that it is. And so there's been a lot of internal displeasure with the current CEO, or the one that they had. And so they made a surprise move, and they've brought Bob Iger back for a 2-year contract. And so there's some hope now, and that's what you saw with yesterday's big move back to the upside, that he can right the ship and start to get Disney back on track from its last poor earnings. Even though, as I mentioned previously, on the even though it had a bad earnings report, the streaming did surprisingly well. So people came back to the parks after COVID, et cetera. It seems like there's a case there for the makings that Bob Iger can get this turned around, and perhaps you have a long-term buy here. That's the way I would look at this. Those of you that are subscribers, no Pankaj on one of our alert subscribers on Thursday nights, always asking for leap opportunities. And I think that's where you are with Disney right now. I think that if you wanted to do something long-term, go out a year or two and just put on a trade and not worry about it. I think this is a potentially really good one to take a look at. Good caller candidate as well. But I think that they stopped the bleeding. I think this really concerned people. When they saw this move down here, the people within Disney were like, whoa. And so they needed to do something to stop the bleeding, and they did. So the next key is getting above 100, but it wasn't going to do that right away after yesterday's big move to the upside. It was going to need to back and fill a little bit. So I would expect that it kind of goes sideways a little bit, just kind of like what happened back here, where it went sideways for a while underneath 100 and then broke above it and took off. Yeah, I think you could likely see that as people start looking forward to what Bob Iger. I'm not even going to say his full name anymore. What Iger can do.
That one's got your tongue tied there.
I guess it does. Bob Iger, whatever. I can't say that.
It happens to the best of us. So I see we're at time, and I'm happy to stay on as usual. As long as you are, you just tell me how many more. And,
well, Disney was a good one, but let's do one more.
One more. I think another good one will be HD.
Okay, that was on the list, so that's a good one. We should look at that because I didn't look at it on the pre-computed list. So perhaps somebody saw it there, or they just had it on their own. It just looks pretty good. I'm concerned. We're not big fundamental traders, right? We're not, but we do like when fundamentals support the technicals. We're primarily technical traders, and the housing market it's not doing well. But then you could argue, okay, well, that means people aren't going to go buy houses. They're going to fix the houses that they're in, which would be good for Home Depot, Lowe's, et cetera. And it seems to be that's what's being looked at here with Home Depot, another one of those small triangles, this one an ascending one that we broke above the resistance level there at 320 today. Can we do some follow through? We're overbought now, though. I mean, if you take this off and look and see, it's overbought from the 10-day moving average. So I'd be very surprised if we could put another up day on Home Depot tomorrow. But perhaps let's look at the DMI. And the DMI is setting up about as well as you could ask to set up. Now, there's your ADX breaking above 20. Remember, though, we're overbought. So if we have a couple down days, I think that's to be expected. But we're at least going to 340 because that's where the wave 5 ended, and we haven't reached that previous wave 4 yet. So, fundamentals aside, we look at the charts and we respect, especially an Elliott Wave pattern like this. And so I think 340 is in the cards, maybe not in the next day or two, or maybe it does. It stays overbought, but I think we're going to 340 there. I'm going to actually add that one to our mini watch list items that we have. This was a pretty good week as far as, some weeks we've struggled to find viable candidates. Some of you probably remember that, where we really couldn't find much. And then this week, we've got a lot of them to look at. So thanks everybody for tuning in on this holiday week. Wish everyone that celebrates Thanksgiving, happy Thanksgiving. Enjoy some quality time with family, friends, and loved ones, I hope. Thank you for devoting some of your valuable time with us tonight. We really do appreciate it. And we hope to try to make that an informative and educational use of your time. in between all my coughing. Apologize for that. Thanks, everybody. Happy Thanksgiving. Look forward to talking to you again